All right, everyone, a very good evening from NCM and NoorCM Academy. Thank you for your participation today. It's 25 July 2024. So before we start the presentation, let's get to know each other. We have a small audience today, but it's totally fine. So let's get to know each other. Please, can you share where are you seeing this webinar from? Where are you living and what do you do? Today's presentation is going to be exciting. I am expecting that people who are attending with us today, they have some kind of experience or background in trading already. So if you're completely new, you don't know anything, please let me know in the chat box so I can adjust my vocabulary accordingly. I'm going to explain you stuff in very simple and easy words. We are not going to use any hard or technical words to show off our experience in the financial markets. Welcome, Mr. Muhammad Akram. Mr. Muhammad Akram's from UAE. How about Mr. Manilal? How about Mr. Hashem? Let's hear from you if possible as well. So today's presentation has been designed in a very systematic way. The first part, the first 5-10 minutes, they're going to be a little bit boring because they're going to be theoretical. Then, inshallah, after 10 to 15 minutes, we are going to move into the technical part. Now, I always ask our students, our trainees, our members, our clients this thing before I start giving the presentation. You have two options today. I know it's 8 p.m. in UAE. It's a working day. People are busy. They want to spend time with family. There are two ways to do today's webinar and the presentation. The first way is the official way. We can finish the PowerPoint slides in 30 to 45 minutes. I can cover everything for you. But if you really want to gain value, you want me to teach you something important, strong, that will help you, then the presentation or the webinar will take some time, or it could exceed more than 45 minutes. Are you okay? Just let me know in the chat box once more that which option you want to go for, the formal presentation or you want detailed stuff in easy words so that you can apply and learn quickly. Welcome, Mr. Manilal. Welcome, welcome. Thank you, Mr. Hashem. Thank you. Thanks for confirming. Welcome. So the best part is that the webinar will not end without answering any of your questions that you have in regards to trading and our company and the brand itself. I welcome all the questions. Don't feel shy. You can ask questions in the chat box and you can ask the question over the microphone. All what you have to do, go on Zoom on the reactions section. There's an option to raise your hand in the Zoom. Once I see the raise your hand alert, I will unmute you and you can come over the microphone and talk about it. Okay, so let's start. This is Mahsin Khan. I'm from NoorCM Academy, which is a subsidiary of NCM Global, NCM Investment. So just let me know, can you see the PowerPoint slides? I'm sharing my screen right now. So this is our topic of today. Can you see the PowerPoint slides? Great, great. So let's get started. Today's webinar is about volatility spikes and scalping strategies. I'm very sure there are a lot of people available on the social media who are talking about scalping, what scalping exactly is. And there's so many methods that are available, which are quite hard for someone to digest. So we're going to go to our first slide. First slide, a quick disclaimer, first of all, a quick disclaimer. Please note and understand. Financial trading is a risky business. Financial trading or online trading, it's just like any other business. But when you start any business journey, you need a physical location, you need a website, you need funds, you need utility expenses, etc., etc., etc. Similarly, in the world of online trading, your tablet, your mobile phone, your computer, that is your actual kind of a shop. That is your actual business center. So financial trading, like any other business, is risky. Do not invest money that you cannot afford to lose. Do not use your children's education fees, family expenses, rent money, installment money. So just, I'm going to keep the slide open so that you can quickly go through it. This session is being recorded and the recording will be available on our official YouTube channel. And we'll even talk about the YouTube page and our social media. So these are our topics today. First of all, we're going to talk about international financial markets. What are financial markets by themselves? How many financial markets are there? What's a role of a regulated broker? Because sometimes when people learn decent trading strategies, when it's time to withdraw their money, they don't get their money. We're going to talk about this. What's the difference between the regulated and non-regulated broker? What is scalping? Why people are so much excited about scalping? Why people all the time, traders, when they enter new in the world of financial markets, they go and start exploring scalping strategies. We'll talk about scalping psychology. Keep in mind you, that online trading is 95% psychology and 5% it is the strategy. Today is part 1. We will talk about part 2 later as well at the end of presentation. For those who are going to stay until the end of presentation, there will be additional bonus strategy which is not covered in today's webinar or presentation, okay? Then we're going to talk about how to select a specific trading product for implementing or practicing scalping strategies. We're going to talk about the market selection because more than 80 trading products are being offered. Which products are much feasible and suitable for scalping? And then we're going to talk about what kind of charts yield the best results, what technical indicators you should use, and we'll even define the technical indicators. Then we'll talk about the entry and exit strategies. Risk management is how you handle the cash that you've deposited when it comes to execution of the trades, and what are the needed technology and tools to continue. First of all, keep in mind, what is the definition of trading? It's very important to understand what is trading. Trading is nothing more than an act of buying and selling. Buying and selling, this is trading. Okay. Now, if you want to write this down, go ahead and write it. There are 4 kinds of trading styles. First one is called scalping, and I'll define all of them for you. Scalping. Scalping is a type of trading activity in which trader enters the financial markets and finalizes the trades in less than 5 minutes. In less than 5 minutes. We will go through official definitions as well. This is the first definition. Second type of trading is called day trading. Day trading is type of trading activity or type of a method in which the financial traders conclude their trading results in the span of 24 hours. When it comes to Forex trading, because the currency markets are global, they're international, they're almost functional 24 hours. Okay. But when it comes to stock market, when it comes to the share market, day trading activities are usually hosted from 6 to 8 hours, depending on the country the stock exchange is listed in. Okay. Third trading method or third trading style is called swing trading. Swing trading is a type of trading strategy or type of trading method in which the traders hold their trading positions and trading orders from the span of 2 days until few weeks. This is called swing trading. Then we have something at last called position trading. Position trading is a type of trading method in which traders hold one position for a couple of months to a year. That's what's the difference between 4 kind of trading methods. Okay. So I asked in the beginning of presentation one question. I'm assuming everybody has some kind of trading background already. If you're a fresh person in trading, just let me know in the chat box. So this will help me just in adjusting my vocabulary when presenting you the slides. So let's move forward. Let's move further. First of all, trading strategies come later. Trading method, risk management, money management techniques, how to enter, exit, how professional trade, how the professional traders trade in financial markets. That's all at the end. The most important thing, first of all, is to know is the definition of a regulated broker. A broker is an entity, or it's a company, it's an organization, okay, who provide you an access gateway to the financial markets. A broker can be in-house it can be in the country that you're living in, and it can be offshore. But the most important thing for a broker, if you wish to open a trading account, it should be regulated. What is the meaning of regulation? That the financial brokerage you're interested to start trading with, they have a physical office, and there is a government entity that is auditing them, that is looking after them, after the company, that is looking after the company and its clients. The best part about financial brokerages that are regulated. In UAE, you have ESCA. And we do have an office and a physical office with branch and staff members located in Dubai as well. We'll talk about it. In Kuwait, we have CMA, Capitals Markets Authority of Kuwait. Okay. Now, the most important part, what the regulator does is the regulator enforces all the financial brokerages services provider that they should have two kind of bank accounts. And I'm going to explain you what's the purpose. This is called segregated bank accounts, and most often people do not really understand what's the meaning of a segregated bank account. Let me define. If a company, this is a company, kind of an organizational chart. If this is a company, let's suppose this is example NCM. Okay, then there would be a regulator, depending if it's NCM UAE, NCM Kuwait, we've got office in Malaysia, we've got office in Turkey, we've got in Jordan, and it's coming soon in other countries as well, probably around this year. Then there's something called a regulator. Okay, there's a regulator here on the top. The regulator forces a financial services provider to have two kinds of bank accounts. Does anybody know what's the purpose of having two kinds of bank accounts? Can you share with me if it's okay with you? Otherwise, I'll explain it anyway. It's fine. They should have two kinds of bank accounts. The first kind of bank account is the retail account. And the second kind of bank account is called corporate. It's a corporate bank account. In a regulated financial services company or a CFD broker, all the money of the customers is kept in a separate bank account, and all the money that is an income for the company for itself to pay expenses, cover up its costs, they're in a separate account. This way, the client funds are protected. The safety of your funds is the most important thing when you open a trading account with any financial broker services provider. Okay, so make sure. How can you make sure if the financial company that you're going to trade with or open a trading account is regulated or no? The example is you should always go on their website in the About Us section, try to know who are the people working there or what is their business license, and does it say who are they regulated by? Let's do a very, very simple example as for the purpose of exploring. So give me a moment. Let's share the screen. I'm going to share the screen right now with you. So NCM Financial is our subsidiary in Dubai. It's regulated by ESCA as well. So when you go to the website, you will see all the needed information. Okay, let's see where is the quick links. We'll go to the hamburger icon. Okay, About Us. This section speaks about the company, its establishments, its details, and it does even have the risk disclaimer and the address. Okay, so you can, I'm just giving you the website here for the reference, ncmfinancials.com. I'll even post it in your chat box. You can visit it and explore and try to dig in more. Okay, for example, if we say here, you can see that NCM Financial Services is regulated by UAE and UAE Securities and Commodities Authority. Securities and Commodities. Under Category 1 license. and this is the number. So see, it is transparent. So any financial brokerage you want to open an account with, there should be 3 elements: sincerity, honesty, and transparency. So everything's going to be transparent. So let's go back. I don't want to bore you further. Let's go back here. So I hope we've covered the purpose of trading with regulated broker. So trading with a regulated broker protects your hard-earned money. They operate under strict rules, ensuring your funds are segregated and you're less likely to be scammed by a fake trading platform. Moving further, difference between a regulated and non-regulated broker. Regulated brokers follow the government rules, compliance policy, and procedures. They are also regularly audited. This means your funds are usually held securely, and there's a dispute resolution process if something goes wrong. Unregulated brokers have no such oversight, putting your money and fair treatment at risk. So now let's start talking about scalping, and I hope you have the Metatrader 5 trading platform also installed on your PC. So now we're going to go into the technical phase. I'm going to talk about some stuff, and if you don't understand anything, just write down your questions. We can talk over the microphone and address them, or you can even write them on the chat box. So be prepared. Now we're going to go into the technical part. What is scalping? Scalping is a short-term trading strategy in which traders, they try to gain small profits with faster price fluctuations. In easy words, scalping is a method in which traders look for quick profits and quick get in, get out. What are its key characteristics? High frequency. The people who call themselves scalping or scalpers, what they do is actually they enter in the financial markets and they do their transactions very frequently, very actively, and many times during the day. And they have a strict stop loss. They have a strict stop loss. You know what's the best part of today's presentation? Officially and formally, I'll teach you a method. I'll share a method with you and I'll tell you how to execute it, implement it, and practice it. But the last thing that we're going to cover is I'm going to share with you that, and we're going to talk about what if you traded randomly without any strategy, without any method. Can you still be successful? That is the bonus strategy that is going to be available if you stay until the end of today's presentation and bear with me. Okay. So let's go further. So high frequency, small profit targets, and they use a strict stop loss. Now, market selection. What's the type of market? You know, the type of markets that you should aim for. Let's first read the official slide. We'll read the official slide and then we'll move further. You need high liquidity markets. Forex, indices, and commodities are preferred. We're going to talk about what kind of Forex markets, because in Forex you have majors, minors, crosses, etc. Volatile markets offer more opportunities for scalpers. Understanding market microstructure, importance of bid-ask spreads. We don't really need to be honest, we can skip this. It's totally fine. We can skip this part. Okay. If you want to write this down, go ahead. What are the high liquidity markets suitable for scalping strategies? I'll give you the name of 3 pairs. Please write it down if you wish. This session, of course, is being recorded and will be available on our YouTube channel, but it's good to write things down, because when you write things down with your own hand, you will remember them. In Forex, we have 3 pairs. 3 pairs which are really considered good. The first one, I'll start with the third one. The third one is GBP USD. The third one is GBP USD. I'll write it down on the screen as well. GBP USD. Then we have EUR USD, Euro against the American dollar. The third one, the best one, which is considered really great for scalping, is the American dollar against the Japanese yen. It moves quite fast. It is very liquid and it's very, very volatile. any sensitive news in regards to global economy, American economy, or the Japanese economy, it creates huge fluctuations. Okay. Then the next market that is suitable is the index market. In the index market, if you want to learn and practice scalping, the best one that is preferred is the NASDAQ, the mini NASDAQ futures contract CFDs. The symbol is NQ. And when it comes to commodities, your second, you'll be shocked now. The second best trading product is gold. And your first best product is oil. Sorry, I have a joint handwriting. So we've covered, if you want to begin scalping, we've covered what you should look for, what you aim for. Now, an important tip. Now, there's an important tip. Of course, the financial brokerage trading platforms, they offer several products, maybe 80 or more than 100. Okay. Choose one trading product only. Choose one trading product, one time frame, one chart, one strategy, and specialize in it, master it, and become an expert in it, and do maximum amount of practice that you need. Because at NCM Financials platform, we offer a MetaTrader 5 and a practice account is also available. And a practice account and demo account is a type of a trading account in which the markets mimic the actual markets, but the funds are not real. The money is fake, but the market and the chart, the way they move are all exactly as the real-time charts. Okay, so let's go back. So we know what are how to select the markets, which markets are important. You have to choose one thing, focus on it, specialize in it. I cannot be a doctor in the morning and engineer at night. So try not to jumping from one chart to another, changing products, changing method. This is something we call strategy hopping. If you do strategy hopping, you delay your chances of success in this industry. So let's go to the other slide. Time frames that you should focus upon. The short-term charts. If you want to learn scalping, the time frame that you should choose as a beginner, if you're someone who's really a beginner and you have a working life, you're busy with your 9 to 5, you have time only in the evening as part-timer, then aim for either, this is something important, aim for either 5 minutes chart or a 15 minutes chart. If you want to learn and practice scalping, stick with only 5 minutes chart or a 15 minutes chart only. But if you're someone who has some flexibility at work or who's most often available on the computer and your administration doesn't mind if you're browsing anything other than your work-related affairs on the PC, then you can switch to 1 minute. But it's good as a beginner if you focus either on a 5-minute chart or a 15 minutes chart and stick with these time frames, and it would be quite sufficient. Now, so short-term charts, focus on short-term charts. We've talked about the charts and the time frames that you're going to use. Essential indicators. What are the important indicators that you may need for learning scalping? The first important one, this is the most important in my opinion, the moving averages. RSI is least important, but it's okay. Moving averages and stochastics. I'm going to share with you what kind of moving average you should add. It should be an exponential moving average. If you want to write it down, go ahead. You will use a 200 exponential moving average, 200 exponential moving average, and I'll do these steps in front of you. So you'll use 200 exponential moving averages, and there's a special customized setting for stochastic, because in scalping, when you're on a minor time frames, the charts move very fast. So the stochastic setting, you're going to keep it at 14.33. I'm going to write it down. 14, 3, and 3. This is what the settings that you'll use for your stochastics. How is the webinar going on so far, everyone? Are you grasping? Am I being fast? Am I being too quick? Is it difficult to understand? If you want to ask any question right now, it's totally fine. Do you want to ask a question? Some questions we'll answer right now. If they are going to be covered in upcoming slides, we'll cover them later. For today's presentation, only 200 exponential moving average will be more than sufficient, and we'll do these steps. If someone wants to come over the microphone and ask a question, it's okay. It's totally fine. I don't mind any questions. I love questions. If you ask me questions, it means you're with me here and you're not sleeping, you're attentive. Yes, 200 exponential moving average, Mr. Hashim. Okay. Shall I move to other slides? Shall I proceed? Let's go. So we've covered the needed moving averages. Now, how to identify and exit, entry and exit strategies. Identify potential entry. See, I'm just going to read this quickly, then we'll do it practically on the chart. It'll be much more easy when you see it by yourself. Identifying potential entry points using support and resistance, trend lines, and chart patterns. I'll make it more easy for you. Either you can stick with support and resistance. You can take support and resistance only and forget about trend lines and chart patterns. Or you can use trend lines and ignore support and resistance if you wish. We want to make our trading career simple, stress-free, relaxed. Okay? Or you can only use chart patterns. Okay? If you're trying to do scalping, please make sure always you have a stop loss, because if you have a stop loss and the market goes against you, you won't bleed your account. I'll give you a quick example here in form of a drawing. Like, let's say I was taking a buy. I saw a W pattern. A W pattern is one of the famous patterns. It's called double bottom, and there's something called double top. Above the W, people usually buy. So let's say if I took a buy around this W pattern, and I took this and the market is going up and I'm quite excited and happy. Okay, but if I did not put a stop loss, if I didn't put a stop loss and the market starts going south, it goes against me. Okay, the account will be affected and will bleed a lot. It will hurt you. So stop losses always act as a decent insurance. So make sure you always have a stop loss. Now, another important thing. If you go over the social media or you listen to any other presenters and trainers, everybody just talks about you should not invest more than 2% of your account size, or your trading account size. The stop loss should not exceed 2%. Do you know what does this mean, 2%? If you take a 2% risk on your trades, it means you can enter the market 50 times. You can trade 50 times. You have 50 rounds of bullets in your trading gun. After 50 trades, if you're not successful, you are gone. Bye-bye. So what's the best way? If you want to practice scalping, instead of taking a 2% risk on a trading account, go for a 0.5% risk. Okay? Go for a 0.5% risk. This is a tip. If you want to start practicing and be on the path of scalping journey, your stop loss should equal to 0.5%. Okay. So what does executing 0.5% mean? With 2%, you have 50 chances. With 1% risk, you have 100 chances. But with 0.5%, you have 200 chances of turning the tables and bringing things in your favor. Okay, let's move further. Determine profit targets based on risk-reward ratio. If you understand today the concept of risk-reward ratio, I can assure you If you practice it for a longer time, risk-reward ratio is a trading technique or method. If you grasp it very well, even if you enter the financial markets randomly on long term, you would still be successful. The math will beat it, and that's very simple. We'll move, but this is as a part of a bonus trading strategy. So, let's start talking about it. Let's start. I'm not going to go through these slides for now. Let's go into the practical stuff. Make sure you have a MetaTrader 5 trading platform. If you don't have, you can install it or download it from ncmfinancials.com. Now, you don't have to follow and set up your chart in parallel with me. The session is being recorded. Once it's uploaded, you can pause the video and you can complete these steps. Okay. Yes, Mr. Hashim, I do understand TradingView is faster and simpler to understand, but we have our own platform. We prefer to show things on it because once you start implementing this method, you'll be using the NCM MetaTrader 5. So it will be good to be familiar with the platform as well. Okay. So I hope you understand me. So let's go to MetaTrader 5. Now, I'm going to right click on the chart, go on properties to set up the colors to make your charts look like mine. Just take a quick screenshot if you wish so that you can make the changes accordingly. I'm going to count till 5 and after that I will close it. 1, 2, 3, 4, and 5. So I hope the screenshot has been taken. Okay, now let's set up a chart. I'm going to go probably on a British pound chart. This is the Market Watch. Control M, or if you go to view, you go on Market Watch. This panel of available trading products will be visible. If you feel something's missing, you just have to right click here and go show all. So all the financial trading products that are being offered by the NCM Financials and NCM Investment, they'll all be listed here. So I'm going to hide all. Okay. And maybe let's talk about the pound dollar, or let's go for USD JPY. USD. I think we lost the internet connection here. Is it working now? Can you hear me? Okay. Can you just share with me where was the last part? What did you hear from me? What was the last thing that we were talking about? I think the internet got disconnected. Would someone like to share in the chat box? Where were we? Setting. Yeah. All right. Great. Thank you. Thank you so much, Mr. Hashim. Okay. Thank you, Mr. Joe. So we are on MT5. We are on the dollar yen. I opened a dollar yen chart. I'm assuming everybody is familiar because today's presentation is for members who are between the beginner and intermediate level. So let's add our 200 moving average. Then we have to add our stochastics, indicator, oscillator, stochastics. We're going to go to stochastics, stochastic oscillator. You have to select this. Okay. Click here. These are the settings. 14, 3, 3, simple. The signal line, make it invisible. The signal line, this one should be invisible. The main line, you can color it whatever you feel comfortable with. Okay, so Let's hit the OK button. And our chart is ready to go. I can shrink the indicator to just put it the way I'm comfortable with it. Once your chart looks like this, right click, go to templates, go to save template. Right click, go on the chart, go to template, save template, and just write here 200 scalping. Why? Because if you go to any other chart, like this one, we don't have to do everything manually. We just go and add the template and it will be set accordingly. How is it going on so far? Are you with me? Are you lost? Is it understandable? Now we are in part of a webinar where we are setting up the charts, we are adding the indicators, and then we can proceed further. I want your feedback. I keep my sessions more interactive. I want to do my best now in the practical phase, not to talk much. I prefer for feedback and reviews and your comments. How is it so far? We covered the theoretical part. We covered for you how to identify a regulated financial broker. Okay. And we covered for you, if you want to begin scalping, what are the type of markets that you need to select from all angles in Forex, in commodities, and indices. Now we are covering for you how to set up your charts and what are the indicators that you need to start practicing scalping. And even we mentioned, if you are someone who is busy with work, you're a part-time trader, because trading is a part-time business. So you can stick with 15 minutes and a 5-minute chart. But if you're someone who's available on the screen all the time, you can move with 1 minute. The method of scalping, the 1-minute chart, 5-minute chart, and 15 minutes chart is exactly the same. Sure, Mr. Joe, we're going to do that. Okay, I'm going to delete and add again. I'm going to delete everything and I'm going to add again. Control I. Delete, delete. Okay. And insert indicators. Insert indicators, moving average. That's the first thing. And these are the settings for moving average. 200 and exponential. It should be exponential. Increase the thickness to level 3 so it's visible. You can see it comfortably. You can color it yellow, whatever you wish. Hit the OK button, and this is, you've got a 200 moving average above the chart and in the chart. Now let's go to stochastic. Insert indicators, go to oscillators. When you go to oscillators, you go to stochastics, choose stochastics, and these are the settings on the screen for your stochastics. Okay. Mr. Hashim, is it clear? Did I cover it for you? Great. Now this is the oscillator setting. Click on OK, and we've got here. We've got oscillator here. Is everyone with me until this part? Are we okay till here? Yes. Yes, Mr. Hashim. You're right. Do you all want a 5 minutes break? 5 to 7 minutes break? Do you want to take a pause? Mr. Hashim doesn't want to take a break. What about the others? Okay. Let's continue then. Let's continue. All right. Okay. Keep in mind, when the price or the Japanese candlesticks or the bars, when the bars are above 200 moving average and green candles are more in quantity, it means the market is in an uptrend. Do you want me to write this down for you? Do you want me to? I'll write this sentence for you. Let's take some notes. Let's take some notes. If the, choose a white color. If the price is above 200 moving average and you have more green candles and the size of green candles is larger, it means the market is in an uptrend. Excuse me for the spellings because I'm writing in white text. It's not that visible. Okay, here you go. If the price is above 200 moving average and you have more green candles and the size of green candles larger, it means the market is in an uptrend. Okay, it doesn't mean we will take a buy. There is a way to take a buy. Similarly, if the market is below the 200 moving average, it means the market is in a downtrend. If the price is below the 200 moving average and the quantity of red candles is more, the length of red candles is larger, it means the market is in a downward trend. Okay, is that clear until here? Is it clear until here? Please tell me. Now we are trying to understand the purpose of the technical indicators. 200 moving average is a technical indicator that is used to identify if the market is in a trend towards an upward direction or a downward direction. If the price goes above the 200 moving average, it means we are bullish. The pressure, the momentum, the strength is towards upward direction. If the prices are below the 200 moving averages, it means the pressure, the momentum is towards the downward side. Okay. Please tell me in the chat box that until this step is clear. If it's not clear, I'll repeat it for you. Just write clear. You can write in the chat box clear. Thank you, Mr. Praveen, for joining as well. All right. Mr. Hashim said it's clear. Let's proceed further. I hope it's clear to others as well, because I do understand sometimes you're accessing the webinar from a mobile phone. It's difficult to type, so I can feel that, I can understand that. Now, this is your stochastic oscillator. There are two important parts of the stochastic oscillator. One is this 80 level. You've got an 80 level here. And there's something called a 20 level. Okay? If the yellow line is the stochastic oscillator here. The yellow line. Okay? It means this is the stochastic line. If the stochastic oscillator is in the 80 zone, between 80 to 100, it means prices are expensive. I'll repeat that again. If the stochastic is above the 80 level, it means the prices are expensive. Another word that is frequently used for expensive is called overbought. If the stochastic is below 20, if the stochastics is below 20, it means the market is cheaper. It is oversold. Now, I'm going to give you examples of buying and short selling. Then we'll move into other stuff. Let's move to another stuff. Here. For example, this is a 1 minute chart. This is a 1 minute chart. One of the classical ways. Now we are going to talk about the strategy and technique. I would request your attention. We are above the 200 moving average here. We went above the 200 moving average. Okay, so when the price comes down, okay, and the stochastic comes and touches 200 moving average and goes above it, this is your buy entry. This would be your buy entry. And many examples we have here. Okay, the best decision on how to work with this is in this way. For example, this is the 20 line and this is the 0 line. We're talking about this area. It's better that the stochastic comes down within this 0 to 20 range and it makes a parabolic or U shape and then comes up. This coming above from the 20 line is your entry to buy. This one here is an aggressive method. Okay, in Arabic we call it difa'i. If you want to go for aggressive method, it's called hujumi. Okay, so you need a proper move up. So we are above the 200 moving average, so we will look for buy opportunities only. Okay, so let's look for more examples here. So here we have a buy. This was a buy. You take quick move in, you get out. Then we have another opportunity as well. You have here a buy as well. This went above 20. This was a buy opportunity. If you missed it, there's another opportunity here, and you can see how it has been going towards the upward direction. But the trick is how you will exit the buy. What's the best way to exit the buys using this method is that you can, if you're taking a buy, when the stochastic becomes expensive or go around this area, you can exit the trade. Okay, if you're taking a buy here, the losses and profits are hand to hand. There will be losers and there will be winners as well. Consider the losses as your expense, as your business expense. But we will talk about how to beat losses as well. Same thing is here. If you would buy here, you would exit it here. Same, around this area. Okay, I'm marking this for you. Okay, so this was an aggressive entry here. So this is an aggressive entry. At this stage of the presentation, do we understand how to enter a buy trade? Mr. Hashim is saying, I have a problem in identifying the crossing. Which crossing, stochastic or the price? Stochastic or the price? Okay, no problem. Here. You see this? Let's go to a 5-minute chart. Let's slow it down. Let's slow it down. See here? Let's assume, okay, let me draw it for you. This is what we call the price went above the 200 moving average, and this is what we call it went below the 200 moving average. It went above and it went below. Sooner or later, it catches a trend towards the downward direction. So here, when it starts, it's below the 200 moving average, it starts to bleed and go and drop towards the downward side. It creates a crash. This is what we call a bearish momentum or sell pressure or market going towards the downward side, because the price crossed below the bars, they're closing below the 200 moving average. Same example is here. The market was above the moving average, it was bullish, but when it broke the moving average and went down, this is called a bearish move. Is Mr. Hashim, is it clear now? Is this step clear? Where should be the entry from crossing after the closure? Where should be the entry from the crossing after the closure under the line? Okay, no, here. For example, in this case, the entry is going to be here for a short sell. Now we'll talk about the short sell trade. Let's talk about the short sell trade. It went above, it's below the 200 moving average, we'll go for short sell. Above 80 zone, you look for short sell opportunities and you would short sell from here. Let's talk about, first of all, entries. We'll talk about the entries. Then you have another opportunity around this area. You can take this. If it's confusing, you ignore it. You wait for another opportunity. You see here? This is for short selling, entering a short sell trade. We are below the 200 moving average. We are below the 200 moving average. And here it becomes overbought, means expensive. Expensive means aim for short selling. Okay. Then we have more examples. Let's go for more examples. Okay. Let's go for this one. Here. Some trades would give you minor profits. Some trades will give you higher profits. Here. Here. Okay, where should be the entry from the crossing after? Okay. Ah, okay. I'll help you out with the mic. Mr. Hashim. Yes, Mr. Hashim, you can unmute yourself.
السلام عليكم.
وعليكم السلام ورحمة الله. أهلا وسهلا. شلونك؟
Alhamdulillah, thank you. The case which I'm trying to explain now, usually I go with 1 minute or 5 minutes, and mostly 1 minute whenever I want to do quick entries and outs.
Okay.
Now the crossing is sometimes confusing, and you're looking at the price. Go to the crossing on the right, which is happening. No, crossing on the right. With
this one?
Again. There was a crossing with the EMA. I'm not speaking about stochastic. Yeah, there are right. Go back.
This
there
one
was a no to the right. Go again.
Okay.
Again, there was a crossing. Now you just passed. Yes, this one.
Okay.
So here, where would be the entry? You see, there is a big green candle crossing the EMA. Usually, that should be a signal to enter, right?
Okay. Cool. Okay, let me tell you something. First of all, here we are using 200. We are not using the 200 EMA alone. We are using 200 EMA with stochastic for an entry.
Okay, so after a crossing, you know, what I understand from you, I have to wait for the stochastic to go below 20 and then do a crossing, then enter again.
No. If you want to short sell, right?
If it's going above the 200, then I should start looking for buys, right?
Buys, yes. Then it should go below 30.
Okay.
Yeah. Is it clear?
So no, I get the point. I thought you referred initially that upon crossing EMA, you can also take an entry.
No. Maybe no. In this method, this specific method we're talking about, here you can use, we use stochastic to give us an entry. EMA we are only using for identifying the direction of trade that we will enter upon.
Got it.
Okay.
Then I might then get some help from you about identifying such a crossing when you have a trend lines or you have support and resistance, how you identify that you have really had a breach of support or breach of resistance. In some cases, it could be a fake.
Yes, you're right. Support and resistance is coming next, but I'll please stay on mic with me so that it's good you're asking questions because it will help others as well. Okay, I hope you don't mind.
Yeah, it's fine.
Right now, we're in the first part. The next strategy I'm going to teach you is a kind of a day trading strategy. It's going to be the most simplest trading strategy. And I personally guarantee and assure you that you won't find it also on the internet. It's so simple to use. How about that?
Hopefully, sure.
Okay. Okay. I'm going to ask you once I teach that strategy, you're going to tell me if it's easy or no. Okay. It's going to be very so. It's much simpler than this one.
Right.
Okay.
Yep. Thank you.
All right. Great. Let's proceed. So I believe this method is clear. This method is clear. We've talked very briefly in express way because today our presentation webinar is actually part 1. We are going to do it more in an introductory form rather than going in a formal form. We're just going to look for more buy entry examples. Usually when you go to history, you get very impressive feedback from history, but in actual, because due to the emotions factor, you might get a little bit, scared with this. So 200 moving average. We are above. So here we have 20 above the price. The stochastic dips below the 20 level, and then it comes up. This is our area to buy. Then again, do we have more opportunities? Yes, we have more opportunities around this area. These are our areas. Do we have more? Yes, we have more. So the money in this trading methodology is made often or during times when the market is trending in either direction, up or down. Okay, guys, you all want to share, switch to something also more easier, something more simpler, and that will make your things awesome for you. How about that? You want to move to something easier? Okay, because we are exceeding time limit, but no, I have no issues with time. As long as you all don't have issues with time, what I'm going to do for you, we'll just quickly finish the slides and then I'll give you an easier method. How about that? Okay, so let's finish the slides, then move to the easy method. Okay, we're going to talk about risk management and money management. Let me tell you something. Technology and tools. You need faster trading platforms, choosing a platform with low latency such as MT5. And by the way, at NCM, we have least amount of spreads available. You need a decent internet connection. If you start your trading journey, you want to execute trades, do not connect to a publicly shared connection on which thousands of people are connected. Advanced order types. You should have information of market orders, pending orders. Now, this is something very important. Please take a screenshot. This is going to help you a lot. I want you all to take a screenshot of this risk to reward ratio chart. This table is something very important. What does it teach you? What does it explain you? If you're trading with stop losses and take profits, let's say you have a 50 pip stop loss and you have a 50 pip take profit. You have to be winning 51% of the time. If you are taking 100 trades, you need only 51 trades to be successful. That's the importance of having a stop loss. Then if you're trading with 1 to 2 risk reward ratio, 1 to 2 risk reward ratio, you have to be successful only 34 times. Only 34 times. If I'm taking 100 trades, out of those 100 trades, 66 were wrong and 34 were correct, I am successful. My personal favorite that I love is 1 to 3 risk reward ratio. You can't be wrong 74 times. That's my personal philosophy. That's my belief. That's my experience. 1 to 5 is extreme. That is also possible. How to trade with 1 to 5 risk reward ratio, this will be covering in our office, in our physical location for our clients. You can contact us later on. So this slide is something very important. You know what I usually say to my students and trainees, people who come to learn how to trade from us, I always say to them, listen, this slide, print it and stick it in front of your table at your home where you have set up your trading desk or you've set up your trading laptop. Stick it there and try to understand and go in deep into it, because if you understand this one, you can develop your own strategy and methodology and enjoy with it. So let's finish the slides quickly because we're running out of time. Some people have to rush. Then I'll give you an easy method. This one, you don't really need this one. These are our addresses. Okay, we are a globally listed company. We are in different countries. All of our offices, they are regulated. We are 15 years in the business. We are headquartered in Kuwait. Each and every office that we have in any country has a physical location. There is no virtual staff. There's a physical staff. There's a proper sales team, customer service teams, operations team who are available to support you. We have customer service executives also available. These are locations, and advanced training sessions are coming soon. This is an introductory one. If you have any queries, you have any questions in regards to training, or even when you become a customer, you can even contact training at noorsiamacademy.com that we are clients with NCM. Please schedule for us special sessions individually or as a group. You can make that request through training at noorsiamacademy.com. And here's the telephone number as well. Now, This is our location. We are located in Al Mazaya Shopping Center, Sheikh Zayed Road, Al Wasl. And these are the telephone numbers. Now let's do the easiest trading strategy, easiest trading method that is available. And this trading strategy or method is kind of a hybrid of day trading and scalping. It's in the middle. It's super simple. Follow these steps. And this method I'm going to teach you, it's actually exclusive for our clients only. And I'll just tell you the classical way. I'll not tell its advanced form. Insert indicators, oscillators, go to MACD. You should have zero line here on the levels and the parameters. This is the secret sauce. There is a $2 burger and there's also a $200 burger. That's this strategy, this technique is your Wagyu beef steak. These are the settings. Please take a screenshot, save these settings, and look at the magic now. Again, this is not a financial advice. It's for educational, informational, and demonstrational purposes only. I'm not a licensed or certified financial advisor. We are regulated. Disclaimer is a must. You must practice this method, but I'll give you a small tip here. It's preferred on a $1,000 account to trade with a 0.01 lot size, micro lot. $1,000 account, stick with 0.01. So if you want to go for 0.02, this should be doubled on your demo account. Again, I'm speaking in regards to demo. So hit the OK button. This is the best trading strategy that you'll ever have. And I'll ask Mr. Hashim at the end about it. The strategy is super simple, super easy. This is the zero line. This zero line that is separating the histogram or MACD bars. This zero line is the heart of this trading method and this trading strategy. Okay, so the technique is very simple and it will wrap things up. So sometimes people ask, why didn't you teach us in the beginning? When the MACD bars, histogram bars, they go below the zero line, you go for a short sell and hold that short sell. And when there's an opposite cross, you take your profit and enter in the buy direction. What's more easier than this one? This one, anybody of any level in trading, whatever experiences, they can trade and practice on this method as well. Again, you have to do this on demo, get a grip on it. Once you're fine and strong, you can do it in a much better way. So this is just an introductory or classic approach of using MACD with this kind of settings. Here is another example. Buy across here, then there's a short sell cross. You take your profits and get out. Let's look for more examples. Then we're going to wrap up the session and I'm going to take all your questions as well. So we are watching here, pound yen. For day trading or short-term trading, go for a 5-minute chart. Same method. If you want to be a long-term trader, you're someone who doesn't want to be on PC all the time, you can use a 15-minute chart. Let's go for more examples. Here, we go below the zero line. You take a short sell. You hold it until the opposite curl. You take a buy here. Then you exit at the opposite curl. You go at a short sell as well. Back test it, check it, explore it. You know, let's go for 15 minutes chart as well. Look at the consistency that's coming on a bigger time frame. For example, losses would come, you would exit the trade at the opposite cross, but the losses are going to be smaller. This is a trend trading strategy. When the market is in a trend, down or upward, it gives decent level of return. So you'd go for a short sell, you will hold those short sell trades. Same as here. You have a buy opportunity around that area and you would hold it. Maybe there's a minor loss here due to economical events. Let's explore quickly. Here you go. Look at this buy trade that was triggered. A buy trade triggered around this area and would have been held until this area. So the minor losses that you might incur will be compensated by the trades that you take during the trend. This is the most easiest strategy. Cross above the zero line buy, cross below the zero line short sell, and it does work very well on NASDAQ and oil especially. Okay, so Thank you so much, everybody. Let's have your question and answers. I think this one was the simplest strategy, and I hope you enjoyed today's webinar. We had to rush due to time constraint. If you have any questions, let's have them now. 1 minute chart is also possible. I have given you the secret sauce. I have given you the special settings. Put on your 1 minute chart, do your back testing, try practice some demo, open a demo account with us, register, visit our office, ask our officers about it. And even once you become a customer, you are finished your KYC procedure, you can ask for me, you can ask for sessions from me via Zoom, and we'll be happy to help you with those sessions as well. So do you have any questions, Mr. Hashim, Mr. Joe, Mr. Manilal, Mr. Praveen? Any questions? Go ahead. Let's take them over the microphone. Let's take them over the chat box, and I'll be happy to answer for you. Any questions in regards to trading and today's presentation? Moving average setting. Here you go. Insert indicators, trend, moving average. Take a screenshot. I'm going to count till 5. 1, 2, 3, 4, and 5. I'm assuming you took the screenshot. So go on moving average, and these are the settings that you will use. We have a session upcoming on how to trade with moving average 200, only with the 200 moving average, without having any oscillators, stochastics, MACD, etc. Okay? Great, great. So, Mr. Hashim, I'm going to unmute you, and I'm going to ask for your feedback, especially. How was this last strategy that we covered, or method? Wasn't it simpler?
I know about MACD, but I'm not sure if it's the same settings before.
The settings are different.
Yeah, probably. I will give it a shot, but I want to see if I can add that on TradingView. It's much easier for me to access TradingView over phone and these things.
The problem is on TradingView, the MACD that you're going to add from the TradingView, the math, the formula behind the MACD of TradingView is not compatible or matchable with MT5, unfortunately. That's the disadvantage. Okay. For example, here, there's one more evidence, one quick, while we're browsing. Here, you have a MACD crossing above the 0 line. Okay, you would have taken a buy. Again, this is a trend trading strategy. Here, it tries to go below the 0 line. Here, you would have exited your buy and switch to short sell. Can you see that?
I think I can add that on phone at least.
Yes, of course. This is a mobile-friendly method. You understood it well.
I'll add it. I'll test now. I'll see if.
Sure.
Because I was not.
All right. Would you like to share any feedback, anything about the session? Was it how do you rate our session today?
It was good, helpful. The point, as I told you, if you would have the time to explain it, that would be good. About the crossing part, if that could be something that you can explain, that would be good.
Sure.
Unless, yeah.
Okay, I will share with you something just with a moving average. Okay, just with a moving average. See, let's go for 200 moving average. See, one of the tricks to understand a crossing part, if you are not understanding crossing, right? This is a cross, right?
It is a bit confusing for me. Now, if you go to the 1 minute, it's more volatile, it's uncontrollable. Okay. And in 1 minute, you hunt 10 pips and you exit, so.
No problem. Here's how to avoid the confusion. By the way, I forgot to introduce myself. I'm almost more than 16 years in the world of financial trading. I'm certified instructor for personal finance and financial trading from International Society of Trainers Developers, Arab Society of Trainers Developers, and Cloud9. So I've been quite long, and quite a lot of people, they know me as well when it comes to trading. So I'm going to make this something very easy for you. Look, this part is confusing, right? We go below the 200 moving average.
Yeah.
Okay, this concept is clear to you that if the price is below 200 moving average, we are bearish, right? This is clear.
Yes.
Okay, the trick is look for an independent candle that is not touching the moving average.
Come again. Okay, independent candle that's not touching. You
Yes,
mean it's
like
a
this one.
crossing, pure crossing.
After
Or-
crossing, you need a formation like this one, the second one. You see this one here? Second one?
Yeah.
This candle.
Mm.
When the price went below, this was an independent candle. It is not touching the moving average. Can you see that? It's not. This red candle is your trigger to enter a short sell.
So the
And when-
dodgy, the green one, is not considered also as.
No, because we are looking for, you want a bearish entry, so you look for a bearish candle. You can cheat, but it's preferred not to. It will be considered as cheating. Okay.
Okay.
All right. Okay.
That's also the same when we speak about support and resistance lines. So if I say it's breaking the
To be honest, support and resistance. Now
scenario,
this,
because in a
now-
1 minute chart, until
Yeah.
you see that second candle, you already reached to the second resistance line in 1 minute, especially when there's a high volatility.
the best part, if you want to give preference to support and resistance, it's good to first draw the support and resistance or bigger charts on like a 1 hour chart or a 4 hour chart, then consider these levels for trading. You know what I mean?
Yeah, but will okay. Yeah.
You know, now we have support and resistance added. We have a 5-minute chart. Okay. Now we can use, but you see, now we are actually switching. The method that I'm teaching you right now about the crossing part is purely based on trading with 200 moving average as an independent indicator. You know what I mean?
No, my point is irrespective of the EMA or what, the crossing concept itself, it's a bit confusing for me. So irrespective of where is the entries, where is the exits,
Let's
to
look at this
identify
part.
it has a crossed or not.
Here, I'll clear it for you. What's your first criteria? It's 24 July. Okay. What's your first criteria for crossing? Price should be below the 200 moving average, صح?
Yes.
Step number 1, price should go below the 200 moving average for short selling. Step number 2, look for independent bearish candle to short sell. So we have an independent bearish candle here. It's not touching. Can you see that?
Mm-hmm.
So this independent candle confirms the cross. Bearish cross. Now we look for buy example. Now here's a bad example as well here. We have a green independent candle above the 200 moving average, right? This is a buy.
Yeah. Yes.
This is a buy. It is a buy, but it is a loser buy. We lost on it. Okay. Losses should be small. Go for a 10 to 20 pip stop loss, 20 to 40 or 20 to 60 pip take profit. Overall, even by being wrong, your overall results are going to be much better than going for 1-to-1 risk reward ratio or trading without stop loss. You have to try. We will cover all of this in the upcoming session. It's going to be discussed in part 2. Okay. If you want, okay, and this part 2, it will not be announced on our social media. You have to contact our team and try to know from them what's the schedule, what's the next schedule. So the recordings are going to be there. Also, I would suggest everybody, if you can go on our social media platform as well and subscribe to our channels. All of these kind of upcoming courses, we are going to announce them on our social media platforms as well. But the best way to know when is the next part of our class, it's better to call our firm. So this is Noorsiam Academy. This is our Instagram. I'll put this in your chat box. Here's a link. This is for, if you're an Arabic speaker, our content on Facebook is actually in Arabic. And YouTube is here. We have here all our video training programs that we have hosted in the past. We even publish our audio podcasts, trainings, webinars, all of them. So I'm going to share with you the YouTube link as well. All right. Great, great. Shall we end the session? Shall we conclude the session? Mr. Joe, Mr. Praveen, do you have any questions?
Do you recommend entry if crossing of stochastic and crossing of EMA happens at somehow same time?
If you want my personal opinion, I would suggest go for the backtest the MACD strategy and check it out.
MACD is even better than the stochastic and EMA?
But it doesn't fall into the category of scalping. It falls in, it's the hybrid of scalping.
Intraday.
Yeah, it's a hybrid of scalping and intraday, both.
Yeah. I was looking at it on gold. There was a crossing going to bullish, probably.
This is also a decent.
Oh, no, 1 minute.
This
Yeah.
one here, let me share this with you. This is also a decent strategy. Here. But we can't cover it today, you know. This is a trend trading scalping strategy for short selling and buying, but this will be covered in our upcoming sessions here.
What are the EMAs that you have used here? Or I don't know if it's EMA or SMAs.
It's EMAs, it's 8, 13, and 21.
1 second, I'll try to write them here.
8, 13, and 21.
8, 13, and 21.
Yes.
Okay, so you basically define the entries once there's a touch and the bases on the buttons, right?
No, not really. Here. The thing is here, let me just grab the tool. Actually, when the, let's say this is a moving average, okay?
Okay.
And this is the price. It's going below it, okay? The first candle that touches, this moving average, above it, there will be a stop loss, okay? Then you have to look at 5 bars behind, which one's the lowest bar. Okay, below it, you'll put your sell stop.
Okay.
This is your stop loss. This is your entry, and your take profit is going to be 2 times, around somewhere around here.
So my entry would be on the touching of the EMA?
No, the first candle that will touch, that is for stop loss, for placing stop loss. Then
and my entry would be after crossing the lowest.
Yeah,
which is the yellow line.
No. Okay, let's use one example here. Let's look at the first example here, okay?
Okay.
See, this is you see that white circle? That's the first green candle that touched the moving average, صح?
Yes.
This candle is called trigger candle, and above it we put a stop loss.
Okay.
Okay. Then you go to previous 5 candles for sell stop. 1, 2, 3, 4, and 5. This is the lowest one. So below the lowest one, you'd put a sell stop. And the target is going to be 2 times the size of the stop loss.
So yeah, so the moment it crosses, I enter immediately due to the order.
No,
not my SL is already
not at the crosses, at pullback. This is the moving average when the market is going
down.
down.
I mean crossing the lowest bottom from the previous 5.
Yes, you're right. Then absolute same goes for buys as well.
And the other condition that I should be, if in case if it's selling, I should be under the EMA, and if it's buy, I should be above the EMA.
Yes, you're right.
Okay.
All right. Great. So, yep, let's end the session.
Okay, thank you.
Thank you so much. Thanks for joining. Have a great evening and take care. And please subscribe to our channel and all the social media platforms, and do visit our office to know more about our physical training sessions and private sessions, which are free of charge for our clients. Have a great evening, and bye for now.